Welcome, welcome. Glad to see y'all jumping in. Keep coming in the room. Keep coming in the room. It's going to be a powerful call. And we're going to get into talking about and going over explaining the platform we like to use when it comes to looking at charts. But most importantly, we want to go and look at, we keep hearing about a futures contract. And we want to go and look at what's called contract specifications. Contract specification. This is where we go to find out about any commodity that's trading in the futures market. Anything we want to know about that contract, we go to what's called the contract specification. So we're gonna get into some good stuff tonight. I love when we go to the site. It's one of my sites I go to every single day. And want to make sure we all know the site and how to go navigate on it. So, get ready to pay attention to learn a lot from tonight's call. But before we get started, I want to go to let me go to Barbara first. Barbara Warren, can we please go over and make sure we stay in order before we get going?
Yes, sir. So here's our disclaimer for Futures Commodities Trading Group. Trading and investing carries a high level of risk. You could lose some or all of your investments. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means that you alone are responsible for your actions in any trading or investing activities.
Thank you.
You're
Very important that
welcome.
we always make sure we take care of that business. But now we need to talk about something very important too. We have quizzes in our group throughout the week, going over some things that we might have covered from the previous lesson. And Dr. Melville always takes us through the quizzes and make sure we get the answer to that. Are you ready for us, Dr. Melville?
Yes, I am. I'm trying to find the chart here's the first quiz. So this was the first quiz for the week, and it said, did corn make a 50% retracement based upon this chart, everyone, that we're looking at? You guys can see the chart?
Yes.
I can.
Okay, so I can't read the chat, so you guys are gonna have to unmute and let us know whether it's a yes or no.
We always unmute anyway, right?
Did corn make a 50% retracement looking at this chart, everyone?
I would say yes.
Okay, Mr. Lucky says yes. Anybody say no?
I'll say yes also.
Okay, excellent. All right, so the yeses win and no one else said no, so very good. Yay.
Yes. Great job.
Yep, good job, everyone. The next question is when the market trades up or down so many points that trading is halted, this is called a false start, paper trading, limit move, day trading, not sure. When the market trades up or down so many points that trading is halted, this is called
Limit move.
okay. Ezra said limit move in the chat. Anybody think differently? Okay, the limit moves have it. Limit move. Excellent. Boy, we hot tonight.
Excellent. We went over that when we talked about the movie Limit Up. And glad you guys paid attention when we talked about that. Very good, very good. And going back to the first quiz, we went over 50% retracement last week, and that was a great job looking at that chart because it was spot right there to the 50% retracement level. But before we move on,
We
I
have
want to ask
one more,
who could,
we have one more quiz, sir.
oh, come on. I'm sorry.
Yeah. What formula do we use to determine the 50% retracement for the charts?
I know.
What is it, Lucky?
The high plus the low divided by 2.
Ah, sizzling, Lucky, you're sizzling tonight.
Yes,
Very
on fire.
good. Very good. Yes, Lucky is on fire.
Yeah, very good.
All right,
Man,
we turn the platform back over to you.
yeah. Thank you. So great job, man. And y'all can see not only is Lucky on fire, he's been paying attention when we going over the lesson, because he got that spot on every time. Great job. Before we jump into the lesson, I just wanted to share something because you may have seen I posted something in the room. That brings me joy, a lot of joy. And had a phone call from one of you all who wanted me to, get into more detail. But because I don't have permission to share this person's, you know, story in detail, but I am optimistic that they will eventually come on the call and share it themselves because they're still a part of our community. But when I made a post about the fact that we was close to having a 7-figure trader that started right here in this room, in this group, somebody called me wanting to get more information about that. And I just want to tell you what makes me so thrilled and happy about this. This person was so terrified of doing this, but also understand that they got started trading right here, even though they got involved with um, through their platform with another group with some other trading going on through the platform that they have an account on. When they share with me the fact that, in spite the fact that they're doing some other type of trading, what's really exciting to me is the fact that they're still using what they learned here and applying it to what they're doing with this other style of trading. And the people in the group are trying to find out what is it that they're doing versus what they're doing, why they're not getting the same result that this person is getting. And they keep talking about in the group things that they, like 50% retracement and gap on the chart. And some people are saying, they don't know what they're talking about. And when they share with me, that it dawned on them that some of these people really don't know a lot about trading, but they're doing well, listen or following the software and system, but they really didn't know much about trading like she thought they did. But imagine this guy for a second. You didn't want nothing to do with trading because you were scared of it. You turn around and finally said, I'm going to give this a try. You start trading. You're intimidated by the market. You start trading and you find out, just like you've been hearing for years, that this is something you could do. And not only that, you find out you can do this and stop doing, you know, your other stuff and make this what you do for your living. And then turn around and grow your account to a 6-figure, almost 7-figure account. Can you imagine doing that? I've been trading 30 years and I ain't had a 7-figure account.
I can imagine doing it.
Yeah, me too.
But quick question, wasn't this person at our last retreat?
They were supposed to come.
Oh, okay, I thought they were there.
Yeah, they were supposed to come, but just imagine somebody that was scared of doing this, man, and having this type of success in the market. What a testimony. But I just love the fact that they, even though they're doing some different style of trading, they're still using what they learned right here from this platform and applying it to what they're doing now. They didn't walk away from what the basis that they learn right here. And that's helping grow with what they're doing. I just thought that was just, man, it just warmed my heart. And I'm sure they'll come on and share with our, the success. They still in our group. That's why I want to let them tell their own story. And guys, just know I'm saying all that to say anybody can do this. It's someone who didn't know nothing about trading and was scared of it. So if you got any doubt in your mind about whether you can do this, you can do this. It don't matter what your background is. You can come from not knowing nothing about this and be successful at it. All right. I just wanted to make sure I pointed that out and talked about that because somebody called me about it. But let's jump into the lesson. And
I did.
before we get into the lesson, did somebody say something?
Yeah, I did. I did. This is Jamal.
What's up, man?
I just came in on this and it really encouraged me. It really did. What you just said to me encouraged me, and thank you so much for sharing that. Thank you so much for sharing that because a lot of things about trading right now, it seems confusing to me, but I'm studying it. So that helped me, what you just said. I needed to hear that, bro. Thank you.
Well, it helped me. Don't think it didn't help me too, man. It really did because I know, what people are dealing with, challenges that people face. Sometimes we have these doubts about whether we can do it. And then sometimes we may not have the doubt. And the doubts can come from other places. Somebody may put the doubt in your mind. You might have shared or talked to somebody about what you're learning or what you're getting ready, to bark up on. And somebody may start putting doubt in your head because you might just listen to, what somebody else is saying. But it's all those things combined. But we really want to know and understand that we can do this. If you take it serious, everybody's journey is different. If you take this serious, it's something that you can do. It's up to you. It can be a hobby if you want it to be, or it could be something you treat like a business. Everybody got the right to do how they want to do it. But if you get serious about it and really, get serious about learning how to do this, it can be life changing. So, good glad we touched on that. And I know tonight we should be, if I'm not mistaken, we should be on lesson 5. And lesson 5, I believe we still on charts. And going over some important stuff on charts. Okay. Support and resistance level. Yeah. And before we do that, Barbara, I think it's important because I really want to do it last week. If we go to the site, the website we like to go to when it comes to looking at charts. Everybody needs to know this site. Everybody needs to go onto this site. And most importantly, understand that it is a free site to take advantage of. We can get a paid account, right, Dr. Mel?
Yes, we can, because I have a paid account.
You have a paid account. Well, we can go on here and get a free account.
Yes, you
And
can.
we can look at charts on here. And I want y'all to know that in my opinion, this platform, this website has the best charts out there in the business. That's my opinion. And if you go to any business channel, do it tomorrow or anytime. Go to any business channel and look at charts. If they showing charts throughout their shows when they talking about the market, I want you to look in the corner of the charts that you see on the business channel that you're looking at. And you'll see the name bar chart in the corner because everybody uses their charts. Okay. Well, we use the bar chart because it's an easy and user-friendly website, but they also got the best charts. All right. So Barbara, looks like you on barchart.com. Can you help us out with understanding how do we get to, and I want to look at corn tonight, but how do we get through this site? Give us a little understanding how we navigate on here.
Yes, sir. So if you Google in your search engine barchart.com, it's going to take you to this page right here. This is considered to be your home screen. There's a lot up here that you see, but we want to focus on futures right here where it says futures. I'm going to click it and
Hold a second, Barbara. Hold a second. When you go to barchart.com, for those of you that don't have an account, you need to sign up for a free account. You have to put a username and a password in there. Because everything that Barbara is doing right now, if you don't have an account and you mark a chart up, when you go back, it won't be saved. It'll disappear on you because you did not create your own account with a username and password so that you can go back into your own personal account and look at your charts you've marked up, and you can change your markups or do whatever you have, and it'll be saved for you every time you log out. Okay, Barb, I'm sorry. Go ahead, hon.
yes, no, thank you for that. So you're going to click, once you get your free account or paid account, you're going to click futures. And if I double click on futures, it's going to say futures market overview. And this is some of the commodity markets. I'm going to click full list. It's going to give me all of the commodity groupings. Once you get to this page, you'll see it's a full list: currencies, that's a grouping, energies, financials, grains, indices, livestock, metals, softs. And so the first market is going to be grains. I'll just click it and it'll show you all the different markets that's in each one of these groupings. These are considered to be groupings. So I'm going to click on the grains grouping or market. It's going to show you everything that you can trade in the grains market. Corn, soybeans, soybean meal, soybean oil, wheat, hard red wheat, spring wheat, oats, rough rice, canola. It gives you everything that's comprised of the grains market. So here it tells you what the symbol is. This represents a contract month. If you look after the name of the contract corn, this lets you know this ZCK25 is for the month of May 2025. And we know that we trade in futures, so you're going to see years that's well beyond 2025. So that's kind of the point of trading future contracts. You can go way ahead of time. So it tells you what the last price was, and we'll get into this when we look at the charts, what the change was in price, where it opened up in the market, the highest it traded, the lowest, the volume, and the date and time. And then you click here, it'll take you to other places on bar chart. The good thing about bar chart is that you can navigate all around it from several screens within bar chart. So that makes it easy for you. Bar chart happens to be very friendly. It's very easy to use. You can navigate around it very easy. So I'm going to click, let's just say December 25. I'm just going to click corn, December 25. So it's going to take me to all of the contracts that I could trade. Tells me cash, starting with May 2025 all the way to December 2028. So it goes from 25, 26, 27. So you can go way ahead in the future trading contracts. One important thing when we get to this screen, we want to make sure we pay attention to volume and open interest. And the reason why is, remember, we're the most important people in the market because we bring what we learned in lesson 2, liquidity. Liquidity that makes us. So it's nothing worse than getting in the perfect market. Everything checks the boxes, but you can't get out of the contract because there's not enough people trading it. That's like one of the worst things you could do. So we look over here This volume represents, let's look at May, 225,896 people that's trading May corn 2025. Open interest, there's 718,060 contracts. So that's the difference. You want to make sure you look over here. And what we typically do is we trade the front month. We trade the first month. And Delvin will explain to you some of the months he particularly trade for certain commodities, like the grains market, like a corn. But you will learn that later on. But you want to make sure volume represents the number of people, the number of us that's in the market trading this month. Open interest are the number of contracts that's being traded for that particular month. Very important for you to understand that. So I'm going to click on May. I'm going to go to this actual contract. This is your most important screen. This tells you everything about this contract and when is it a good time, the costs. We're going to get into risk management. This is where you want to go if you want to know how much is it going to cost me to trade corn. You don't want to just get in this market and you have no idea, because what's our golden rule? Never risk more than 10% on any one trade. So you will find that out here. So this is your contract specifications page. And on this particular page, Delvin, did you want me to go on or do you want to jump in?
Yeah, I want you to go on. You're doing a great job. I'll come in if you need me.
Okay, so at the top, it tells you corn, May 25, tells you the current price right here, 458 and 4 cents. It tells you that where it traded at, where it last traded at. We know the market opens up at 7 p.m. CST time. So we know the market will be open. So this is when the grains market, they trade at night, overnight. So if you come over here, it's going to give you an overview for corn. It's going to tell you the day low, the day high, where it previously closed at, the volume, open interest, what you've seen on the previous screen can be viewed right here. The statistic percentage, national corn index, the weighted alpha, your 5-day average, your 1-year range, where it trades at in about a year's time frame. Remember, we talked about charts in one lesson already, lesson 3, I believe. And we said we don't trade off the 1 year, but we use it for information because we want to know what's going on in every contract month. And so this is important to pay attention to. Once you come over here, it gives you a short view of how the full chart looks with all the different time frames. Here, you can set an alert. If you click here, you can set an alert up. Say you want to know, you want to get into corn and it's in a downtrend, but you want to know when it hits above your number 2 so you can go in and get in a trade. You set yourself an alert there. And so it'll let you know you can't do but one alert per market. If you want to build a watch list, there are certain, and I have a different watch lists that I have. There are certain trade markets you want to trade, and you want to, mark up your chart, and you want to keep an eye on those markets. You add this to whatever watch list you want to add it to. You can always go back to it. So that's what that's for. If you scroll down, because we have 2 types of traders, we have technical, we have fundamental. And so we know that fundamental traders, they look at news, blogs, and different videos. But when it comes to the grain market, I know Delvin watches the news. It becomes a weather market at some point for grains. So you want to keep up with what's going on with the market. This is a part of learning the market's personality. And no single one is wrong. A lot of people typically be both, and that's okay. We learned that in lesson 2. And so you read about it, what's going on in the market. because we know fundamentals do affect the markets. We just found that oftentimes by the time it hits the news, the market's already reacted to it. And so here is the meat and potatoes of the contract specification of this overview page, which is contract specifications. You want to definitely go here. So it tells you the contract is corn. The contract size, 5,000 bushels. If you remember the movie Limit Up, when they delivered those bushels at that wedding, this is what they deliver. Imagine having dump trucks, and these would be like probably several 18-wheeler big trucks to get 5,000 bushels. Because if you're a producer in the group, then you know what it means to take delivery on the product. But we don't have to worry about that. Nobody's gonna bring no bushel of corn to your residence if you stay in the contract too long. But this is the control that you have over this market. The good thing about it is that you're in the same market with commercials, with large producers, large speculators. You're in the same market and you get something called leverage. Imagine only having to have margin and maintenance in your account to get in this trade and whatever amount you're going to risk, but you control 5,000 bushels. That's the power of leverage you have in this market. Your tick size. Now, every market is different. The tick sizes are given to you in a different, some of them are decimal, some of them are fractions. This is 1/4 cent per bushel, which equals $12.50 per contract. So I myself found it easier to take fractions and put them in a decimal. So if you do that, that's really 0.25. 1/4 is 0.25. I'm pointing this out to you because it's no way for you to keep risk management if you don't understand this. You can't do it. And it's very simple math. So the point value is $50. So $12.50 times 4 equals your point value of $50. So who knows if this trades, let's just say 2 cents, what would that be in monetary form? Who can tell me the answer, knowing now that this is 1/4 cent per bushel and it's $12.50 per contract? If this market moves 2 cents, how much would you have made? Who can tell me the answer? If it moves 2 cents, who knows the answer? I know somebody up here knows the answer. Come on, my older students, who know it?
Ezra put it in the chat. He put $100.
Okay, Ezra. All right, okay. Do everybody agree? Is it $100?
Yeah. Yeah, because at 5.
Say that again.
It seems to me that if a 1/4 cent is $12.50, 1 penny is $50, which is the point value. So if it's 2 pennies, then the point value would be twice that. So it would be $100, like Ezra said.
Excellent. Lucky you still on fire. Okay, that's it. So you got to understand the math. It's simple math. Got to understand it. And as we get on in the course, you'll learn about the different brokers. Some of them, if you're going to put in your own trades, you have to learn how many ticks to put in. And some of them allow you to do it by points. So this is another reason why we want you to know that. But you'll learn more about that as time goes on. Trading hours, very important. You can trade in this market day or night. It just depends on the grouping and when they're open. So trading hours for the grain, 7 p.m. to 7:45 a.m. Then again at 8:30 a.m. in the morning to 1:20 p.m. It settles at 1:15. That's your last price that's your closing price. Sunday through Friday. Remember, Delvin said he can't wait till Sundays come around. He can't wait. This is why, okay? His favorite market opens up. Hint, hint, that's why. Okay, so your exchange, this trades on the Chicago Board of Trading, CBOT. This trades here, and your point value is $50. Every cent it moves, be it up or down, is $50. Margin and maintenance is $1,155. That's how much you have to show in your account to say I can even do this trade. Without it, the broker is not even going to let you in the trade. You can't even get in it. It'll fire in the system. Even if you try to put it in yourself, it'll take it out in the system. It won't allow it. And you have to maintain $1,050 at the close of every day while you're in that trade. If you don't do that, you're going to get what's considered a margin call, meaning your broker is going to call you. That means you don't have enough money in your account, and you're going to have to make something happen that same day because they don't play. They will go in and liquidate your account. You don't ever want to be in that position, but we know that's why Delvin tells us to keep the rules for that very purpose. So you don't get in what's considered to be a margin call. I think he's been on maybe 3 his whole 30 years, which is small to be trading for 30 years, but we don't want to do that. First notice date is April.
Hey, Robert,
Yes.
if it's okay, can I add something right here?
Yes, sir.
I hope everybody's taking notes. If you're not, I want you to write something down. I want to go back to the margin and the maintenance. Okay. So I want you to understand this. This is very important because, like Barbara said, this is what you need to have in your account in order to be able to get into the trading corn. Okay. So I want you to take that word margin and substitute it for deposit. Okay. That way it helps you understand what margin is. That's a deposit you need to put up in order to get into this trade. Whatever that margin amount is. So write down margin/deposit. Okay, then on the maintenance, I want you to write down the word balance. Write down balance. So we're going to have margin/deposit, maintenance/balance. We want to keep a balance while we in that trade of whatever that maintenance is. Our account, like Barbara said, doesn't need to go up under the maintenance. And then you're not able to stay in the trade if your account goes below what that maintenance says. So substitute those words to help you understand them until you do this for a while and you'll understand the words margin and maintenance. But in the beginning, I like for people to think about substitute margin for deposit and maintenance for balance. Okay, go ahead, Barbara. You're doing a superb job. I want to take it back to you.
Thank you, sir. So next is first notice expiration date. Very important. We have a certain time frame. We know that we trade future contracts. We usually in our contracts maybe a couple of weeks. So this is very important. In other words, you don't want to get in a trade and the contract is due to expire in 5-6 days. Not going to give you enough time. You don't want to get in that trade. So it gives you what's known as a soft reminder, letting you know, hey, this contract is nearing end. That's what that first notice means, 45 days from now. Then it's going to expire on in 59 days on May 14th. You want to make sure you pay attention to those 2 dates. And you'll get further teachings on it. What do you do if you want to go to the next month? You like this chart, you want to keep on working on it. We'll get into that in another lesson. Next is seasonal chart. It gives you seasonal chart, the average price moving per average chart for 5 prior May contracts. It kind of gives you, this is like some technical history on corn. Traders that are in the market, commercials. lets you know how many is long, how many short, producers, how many is long, how many short, managed money, long and short, non-commercials. So it lets you know who's in the market, how many's going long the market, how many's going short the market. So this is important too. And you know how many is in this market that's small speculators. So compare it to these numbers, and you can see that we're able to all be in the same market. And this is especially important to you if you happen to be a producer. So it lets you know, it kind of helps you position wise, set yourself up if you're a producer. Then you have other information, price performance for corn, gives you more corn contracts. Here is a lot of fundamental information that affects corn. I know we're big on listening to Ag Day. If anybody want to write that down, you're wondering what does Delvin listen to for the grains, he listens to Ag Day. If you're in the Facebook group, then you see a lot of postings about Ag Day. They give very spot on news about the weather and everything. So they're good to follow for fundamentals. But you can click on these and it's full articles. Some of these have videos with them you can listen to. And there's a lot of information. So it goes into the market to help you understand. We're going to click where it says see more. And when I click there, it gives you even more information. Like one of our questions was about limit move. And you're gonna see that here, the daily move. Most of the markets have a limited amount of points that it can trade a day in a trading day before they halt it. There are some markets, Delvin, if I'm correct, that don't have a daily limit, but most
Correct.
of them come with that. And so it gives you the symbol, ZC, corn, the exchange, this information that's on the previous screen, but it tells you the daily limit. Pay attention to this, 30 cents per bushel. $1,500 per contract. Expanded limit is 45 cents. So when it hits this limit daily move, when it opens back up, they expand the limit to 45 cents. So it goes from 30 cents until it hits that daily limit, meaning when it hits 30 cents, they halt the trading. When it opens back up, they expand the limit to 45 cents. Now, Delvin, you can tell us how long does that expanded limit last?
It depends on the volatility. Once it calms down, slows down, they'll go back to the regular limit.
Okay. Yes, sir. Thank you. I hope everybody listening to that, because that's a capitalization moment for you. That's why I want everybody to know that you can capitalize if you're in the market, if the limit is expanded. Contract size 5,000 bushels. These are all the
Stop a
months.
second, Bart. Stop.
Yes.
That one section on the daily limit, so everyone knows that that's what helps to keep prices not swinging way where no one can afford to live from day to day.
Yes.
Okay, so that's the importance of them putting a daily limit on how much price can change on a necessity for life. Okay, and so because I didn't understand that when I first learned this, and I just wanted to interject so that you guys know how important that daily limit is for everyday normal living for everybody on planet Earth to be able to buy necessities and to stay within the budget of their families and things not swing so high or so high that you can't afford to buy it, or so low that the producer can't afford to bring it to market because they don't have a profit center that they can cover their overhead. Thanks, Barb.
Yes. Thank you for bringing that out.
Great point. I want to jump in and add, because that's actually a second part. Great point, Dr. Mayor. That's actually a second part to that when it comes to that limit move. It also is helpful and put in place to protect you as a trader when it comes to you trading. So there goes that myth and that rumor that you can lose your house. Oh, you don't want to do that, because there's a limit put in place where this market can't trade with so many points in a day's session. And that's it for the trading. But the most important thing I want you to know about that is that think about the fact that we talk about this market is regulated. If you're familiar with some of the other markets, let's take crypto, for example.
Did Delvin freeze?
It's not regulated. Crypto's not regulated, right? So Bitcoin can trade as high as it want to or as low as it want to. It can go 50,000 points in one day if it wanted to, or down 50,000 points. Well, these markets can't do that because that limit is in place to protect you as a trader and, like Dr. Melville pointed out, to help with prices so we can feed our family. So very important. Thank you, Dr. Melville, for jumping in with that. Okay, Barbara.
Okay. Oh, yes, sir. Thank you both. Let's see. Oh, months. This tells you all the months that you can trade contracts for corn. March, May, July, September, December. And it gives you the symbols for it. And we know that Delvin likes December. He likes to trade the December month. Who on the line can tell me why we favor the month of December for the grains?
Just probably because it's holiday.
Harvest, end of August.
Say that again. Say that again, Tanya.
Is it because of the harvest? The old ones are going out and the new ones are coming in? I haven't got my notepad.
New crop?
Yeah.
Okay, all right. That's it. New crop. New crop. Okay, that's it. So yes, for wheat and corn, it is December, and for soybeans is November. So that is why. That's correct, Tanya.
Can I also interject too for Jamal?
Yes.
Jamal said the holidays, and that's really
Oh,
good
okay.
at that, Jamal, because one of the things that Barbara and I had to learn, we had to control ourselves and not trade through during the holidays, because that's one of the least profitable times to trade,
Wow.
because the mark tends to be a little bit uncertain during that time. And so we're taught not to really do a lot of trading during, futures trading during that time. So that's
Yes.
good that you said that.
Yes, it was me, Dr. Melba. Yes, ma'am. Yes, indeed.
But no,
Yes.
it was helpful that you said that, because we would have not remembered to say that to the group, that, holidays are the times that we really don't do a lot of trading, because the market tends to be a little temperamental.
Yes, ma'am. Thank you.
Yes.
Before we move on, I want to make sure everybody clear on what Barbara just said and what Tanya just said. When it comes to the reason that we focus on the December contract when it comes to corn, she mentioned the word new crop. So this is the beginning of when the grain season gets ready to start right now, meaning that farmers are out getting the fields together. All right. They're getting ready to start planting. The growing season will be next. So what we have is the planting getting ready to get started. And then we have what's called a growing. Now, once they plant it, then it goes through the growing season. And then we come upon harvest. But the reason we like the December contract, because December trades off the new crop that's getting ready to go in the ground to be planted and grown. Those other contract months, the March and the May and the July and September, trade off the old crop. So there's corn that's been grown last season that's still in warehouses and it's still being sold and exported. And that's what those contract months trade off the old crop. And December will trade off the new crop that the farmers are getting ready to plant now. And that's why we use that December contract once the grain season starts. Because whenever things are affecting what's going on with the crop that's being planted, the December contract is the one that's going to be affected the most. I hope that makes sense to everybody. Just wanted to throw that, make sure we understand why why we go after the December contract. All right, Barbara.
All right, thank you. So it tells you the point value $50. For the value of one futures contract is $50. The value of one options contract is still $50. Gives you the last trading day, the business day prior to the 15th calendar day of the contract month. This means you have to be out of this contract by this date, or you are gonna have to decide, well, I want to go to the next contract month. I want to roll it over and go to the next contract month. You'd have to work that out with your broker. But you can only stay in these contracts for so long. And it gives you a description about corn, it's a rather long description. You can come here. I urge everybody just come and read. It'll help you learn about the market itself. Then you have a bunch of tabs over here. Price overview, that's the previous page, lets you know the performance. This will take you to the chart. Not gonna go over everything. This takes you to the options prices. That's a whole nother class that we offer and teach that you can get, that's separate from futures. News, and takes you to the current future prices. So I'm gonna click back a page. So, and now we're going to go to the full chart for this particular market. And this is the full chart for this market for May. So you come here, you're like, wow, it's a lot going on. Where do I start? But we learned about 50%. So we know the first thing you do is mark up your chart for the 50%. You look down here you can click on all the time frames. We know we look at the monthly chart. That's 1 month, 3 months, 6 months. We look at 5 year, we look at 5 year, 1 year and 5 year also, to help us better, put our plan together for how we're gonna trade, whether we're going to trade into the upside or the downside. But there's a lot of places you can click on. Like I said, in bar chart, you can get to several places in here on pages. Here go your alerts again. You can set your alerts from this screen. You can put it on your watch list from this screen. So we have a video too that people, you can watch and learn more about this. For time's sake, we're not gonna be able to go over everything with you, but it allows you to write on your chart. You want to write notes on your chart. You want to put, lines on your chart to mark up prices. You can click over here and put your trend line. If you want, we hadn't got to that lesson yet. You can mark your trend line up. You can put your numbers on the chart. We haven't got there yet, but it'll a lot you can do on this page to mark up your chart and better, so you can go back to, because when you go back to this chart, you're not going to remember what was going on with this chart. So that's why you have all of this over here, so you can mark your chart up and you can remember what this chart was speaking to you when you came up here. But we're going to get further into the charts as the lesson goes on. If you want to do line bars and instead of candles like I have, you click here, right here, and you can put your bars up here. If you're a bar person, you can change it. If you want candles, then you can put your candles up there. But we'll go the rest of the lessons, we all charts. So you're going to see us come here over and over again. So it's best you take notes, take screenshots. So after the class, you can go and follow behind us and know where to click at, know where to go. Okay, Delvin, anything else you want us to go over with this, with bar chart? You're muted, Delvin. We can't hear you.
I'm sorry. One last thing before we go, I want to go back to the price chart. And I want everybody to understand why you see that little bit of S beside the last price, the closing price. When you're looking at the prices, you seen when Barbara was showing us about the different, the last and the open and the high and the close. I want y'all to pay attention to that little bitty S. Are you able to go back to the price chart for me? The price overview chart for me, Barbara?
Yes.
And
You mean, oh, the previous page here. Here we go.
yeah,
This page.
yes. So do we see an S behind the number, the price? Are we able to see that?
Mm-hmm.
So that S stands for settlement. So when the market closes, you will see it'll be showing the last price that the market traded at right at the closing time. And then if you go back maybe 5 minutes later, you'll see the settlement price. Sometimes the last price that you're looking at can change once they get all the orders that have been placed in. Then they'll have what's called a settlement price. Keep in mind the market's moving fast, and the volume that Barbara mentioned talked about. You will see the volume, the most volume when the right around the time when the market opens and real close to the time when the market closes, the volume will increase during both of those time frames. And once the market closes, you'll see a S pop up beside that last number, and that's the settlement price. That's the price where the market settled that day. Now, this is how it looks when the market's closed because the grains haven't started trading yet. She showed us a trading hour. We have what's called the night session, and then we have a day session. So on Sunday evening at 7 p.m. Central Time is when the grains start back trading. And then you saw on the hour when it trades all the way up until it's time for the night session to close in the morning. And then the market's closed for about 30, 45 minutes. And then the day session starts. It opens up with a new session. That's the day session. And it trades till the afternoon. And it closes again at the closing time. And it's closed for a while. And then it opens back again for the night session. It repeats that cycle all the way until Friday afternoon. And then it's closed until Sunday evening again. But one thing I want to make sure I point out before we go from bar chart is that when you're looking at bar chart, I want you to always remember that this website, the prices that you'll see, this is a delayed prices, okay? 10-minute delay. So it's not real time. So the market's getting ready to open here in a couple of minutes. And you'll be saying, well, why price is not moving? That's because it's a 10-minute delay. If you went back at 7:10 Central, in 4 minutes, the market getting ready to open. But if you go back in 14 minutes, you'll see prices moving. And to show you what that looks like, I want to go to a market just to show you what it looks like when prices are actually trading and moving. Barbara, can you go to gold and show how prices, what it looks like when prices are moving? Also, Barbara, can we, in this grain market, I know we looked at some margins that were like $1,000, but can we get into corn with a lower margin than $1,000 that they said? Is there something else
Yeah.
we can do?
Yes, sir. So we have a market called mini and micro futures. These markets are smaller versions of the bigger markets. Every market doesn't have a mini and a micro, but majority of them do. So if you look on this list, you see where it says corn micro, corn mini. Those are smaller contract sizes for the big market of corn. The point value is different. It's a lot lesser. So we're pointing that out because if you're wondering, well, where can I start? You can start right here in mini and micros, and you can build up your account by trading them and work your way up to the larger account. So it's something for everyone in futures and commodities.
So basically, Barbara, you're saying those are going to have a smaller margin than that big contract, correct?
Yes, so what you saw is a $50 point value, and the Bitcoin is $10 in the Coin Mini. And micro is $10. So that's a $40 difference. So that's excellent. That's good news. So that gives you a place where you can start it and work your way up to the larger contract. So it's the same, the tick size is 1/8 cent per bushel instead of the 1/4 cent. So it's $10. It's just a smaller contract size for you. So that's excellent to know. A lot of people wonder where they can start with their account or budget right here. And they're all different, different point values, but they're lesser than the bigger ones.
Can I interject
the
here
mar-
also? Remember,
the market.
Mr. Wright said to us that your deposit to enter the trade, like with corn, was like over 1,000. With this mini, it's your deposit will be $231. And your balance to stay in the trade will be $210. So it's a big difference as far as, the amount that you would need to enter and to stay in the trade with a mini contract.
Yes.
Yes. Very encouraging for everyone. Thank you, Dr. Melba. So,
Yes.
yes.
Last and final thing, just I want to go to a market that's actually trading so we can see prices actually
Okay.
moving.
Yes, sir.
And we can get off. I think we have to go over support and resistance on a different call, Barbara.
Yeah, we'll have to do that next time on a different one. Okay, here we go. This is gold. Oh, that
Yeah.
kind of is being
Yeah,
relaxed.
stay on that price overview chart. I want to see prices moving. Market should be open. So we can go back to that
No.
page.
Here we go.
And you'll see it lighten up.
Mm-hmm.
And you'll see the market actually trading. And the S won't be there because the market is open and trading. So you'll see that's why you don't see that S, because the market is open now. Barbara, you did an outstanding job. Thank you so much for going over bar chart, because we use bar chart to do all our business, all our trading. And we gotta know how to use it and where to go. And we talk about future contracts all the time. Future contract. What in the world is a futures contract? Well, you want to know anything about that futures contract, that's where you go. Contract specifications. Sometimes you may hear me say to the contract specs, but I'm talking about the same thing. When I say specs, it's meaning specifications, okay? Just a little abbreviation for specification. But man, Barbara, I couldn't have did a better job. I don't think Johnny B could have did a better job. I think you nailed that thing, boy. Woo, great job. I hope everybody got value out tonight, because we use bar chart to go over charts, and like you said, the rest of the way it's all about charts. So understanding that site is so important. Thank you, Barbara. Great job.
You're very welcome, everyone. Yeah, we love bar chart. All
Yes.
right. So,
Yeah. I know we went to the hour, but I want to open up because I know y'all gotta have some comments or questions about tonight. And we won't. Do y'all have something to talk about or say anything about y'all call? We won't even talk about retreat. The retreat sold out, y'all. It's too late. If you ain't get your registration in, it's too late. Retreat sold out. And you, we'll see you at Traveling Trade 4. I'm just kidding. We still got a little room left. I'm just kidding.